Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
Welcome to the Real Estate Reserve Podcast. On this episode, we are going to be recapping 2021. We're going to go through some of our closed projects, some of our key takeaways, along with recapping some of the popular guests that we had over the past year. 2021 came and it went. That's typically how things go. They move very, very, very quickly. Also, if we have some time, Ian, we might as well go over some of our ambitious 2022 plans. That's always a crowd pleaser. So I'm Jason Balin with Hard Money Bankers. Sitting next to me with his big beard, Ian Horowitz from Equity Warehouse. Looking forward to spending the next 30 minutes with everybody. So tune in. Hope you're enjoying the holidays so far. And let's start recapping 2021. Right, Ian? Let's should we start with some of the closed projects that we all did?
Yeah, I mean, I think we should do some of the closed projects, the guests, everything. You know, I'm over here trying to share. We still haven't figured out in 2021 how to make this thing completely automated and get everything shared. So I am here with you. But I have to agree. I think we've had some, I mean, us over here at Equity Warehouse, we've had some massive wins in 2021. I was just writing down everything here, and I'm sure I missed a bunch of stuff. But if you want to do closed projects for our companies first, let's do that. I mean, one of the first things we did this year was we added another 10-unit building to our Ranson, West Virginia apartment portfolio that we have with Pete Belden. We took that from 34 to 44 units and actively growing that portfolio out there, and it's been a lot of fun. That portfolio there actually opened our eyes to having third-party property management, really identified how what we're good at and what's the time suck for us and what we need to outsource versus what we can keep in-house, and how we can work hand in hand with our third-party vendors.
Well, so let's talk about that among some other things real quick. So you expanded an apartment building that you had already had, that you purchased in previous years. Was that your first apartment building that you'd purchased?
That was the largest one we purchased. We bought that 34 units in January of 2020, right before Corona. It was the largest acquisition that we had made to date. And then from there, we added another 10-unit building to that portfolio.
Got it. And then White House was also in 2020. I'm just trying to figure out what your 2021 was.
I'll give you a rundown. So 2021, here's some big ones that we had. So we had the 10-unit out in Ranson, West Virginia. We added our first Airbnb. Let's see, Gaslight Square technically was a 2020 project, but we only owned it for 2 weeks. So I count Gaslight Square into the portfolio in 2021, the 80,000 square foot commercial project. We refinanced White House Manor Apartments, which is the 76 unit building. We purchased that in 2021, refinanced 16 months later in 2021. My years are getting confused here. Then from there, we purchased a 3-property, 250,000 square foot portfolio in Baton Rouge, Louisiana. Bringing us to a nice stronghold down there, about 350,000 square feet, with a few other properties that we had bought in that area altogether. And I think my biggest takeaway for 2021, but I'm going to hold off for a second on that one.
So was this a normal year for Equity Warehouse or a good year?
Things are changing, man. And I'll tell you right now, things are changing because, we used to do a lot of single family stuff. So it was a lot of volume. Now we're doing a lot more quality over quantity, and it's really the dollar size amount. It's not necessarily the quality, but the quantity has changed. And the dollar amount's gone up, but now we can do one project all in one versus doing a bunch of, hundreds of projects a year, right? We went from doing 50, 60 houses a year down to doing 3 or 4 acquisitions a year. So I'll say we remain equally as busy, just the projects are all in one location now. We have a stronghold in Ranson. We have a large property in Baltimore, so a few of them. And then we have this other portfolio down in Baton Rouge that our time's getting divided up equally, just it's not being, divvied up a bunch of projects, and you're always in and out of that same cycle. You know what I mean? Now
So-
we ran. Sorry, go ahead.
I was going to say, so let's talk about that Ranson, West Virginia one, because that's a reasonable size, I think, for people to wrap their brains around. Not that, not that folks shouldn't be trying to do larger projects and stuff like that, but let's just represent that one. That was what, 34 units you said?
Yeah, it was 34 units. Well, the original project size was 34 units. The original seller sold it to us, and then she has about another 70 units across several sites. She decided to break off a 10-unit building to us.
How much work and time do you think that 34 unit took compared to the single family space, right? So you have well over 30, you have in the hundreds of rental properties, single family rental properties. So let's say you went to acquire another 34, or not even 34. That's not a good example. Whatever, let's do this based on money, net cash flow. That's probably the best way to do this. So what's your net cash flow on that? Do you know?
So I would say that the net cash flow, basically you're bundling up 34, 40 houses that you would do all at once, and all that stress. And it's give and take, right? Like leading up to buy the project, I would say is more stressful than doing single family, because there's a lot more requirements from environmental surveys, lender requirements, raising capital, right? Like the acquisition side got a little more hard. The executing the project was the same to me in the single family world. And then the benefit, the cash flow, I think is exponentially better, because you don't have 34 roofs or 40 roofs. You have one building or 4 buildings encompassing 44 units now, right? So I would say that the cash flow, I would bet if I had to compare it dollar to dollar on repairs and maintenance, that they perform exponentially better being in one location.
I'm making notes in the comment section here as well, because that was a really good takeaway. What am I writing? Would you rather own one 34 unit property or 34 separate properties? I'm gonna get some audience engagement to see what people think. So I'm gonna recap what you just said, because that was interesting. So you got, let's see if you can see my hands right. Okay, so this hand you have 34 single families. This hand you got one unit that's 34 units, and this one up front is a heck of a lot more work. There's a lot more due diligence. There's a lot more time. There's a lot more upfront money, right? If you're doing 34 units or 34 single families, let's say you only need $10,000 or $15,000 into each one. They're staggered, right? You're not buying them all at once. So, okay, I need 10 grand. Now I need another 10 grand. Now I need another 15 grand, another 20 grand, whatever the case is. This case, you needed it all at once. So you had to raise capital for it and put it in one. So upfront was a lot more work. The construction and the renovation, you said, was equal
for us, because that's our background, right?
And then, but that would make sense. If it was equal for you, I think it'd be equal for a lot of people, right? But the back end is where it's at, because the cash flow is better. It's more hands off. You could easily put one property manager in place that understands the building and knows the building and can handle it all. So it's a good breakdown. I like that. All right, so we'll go to me, and then we'll go back to you on stuff. So we didn't have any acquisitions this year. We actually had the opposite. We sold all of our rental properties this year. We felt like it was a good move for us. We sold the majority of them in early 2021. In hindsight, they're probably worth 25 to 40% higher because of the market right now, but that's okay. Our reasoning was we sold the properties. We'd owned them for anywhere between 6 and 8 years. So they all appreciated in value. And to us, we wanted to utilize the capital from them in order to redeploy into loans, which is our business model, lending money. So we looked at it, and side by side cash flow, either the cash flow we were getting from our rentals or the cash flow we're getting now from deploying that capital, right? We took out the money, we're deploying that capital is about equal, right? So that's equal. Now, the two differentiating factors are if we left as a long-term strategy, if we left them in houses, the houses maybe would have appreciated, maybe not, but the debt obviously would have continued to get paid down. We were at 10-year ammos or 15-year amortizations on those. So the principal payments were going down, right? So as that occurred, as those things get paid off, the cash flow gets built up. Obviously, you still have the ownership equity, depreciation benefits, but we also don't have the headaches that we had before. And that was a big thing for us. And we looked at it, well, we don't have the headaches. We're able to compound, with compound interest and lending the money out at a 13% interest rate, that could grow faster and faster. So we looked short-term, we looked long-term, and as it all came out, it ends up being, we thought about the same, but with a lot less headaches, and we were able to put it in an investment vehicle that we like and control and we're comfortable with. And we felt that the market was at a spot that we wanted to exit on, and maybe we'll buy and ramp up more in the future.
Yeah, and I think you guys took advantage, and you disposed of the properties in a fashion that allowed you to reinvest the money in something that you're comfortable with. So I guess I'd have to ask you, or point out that you figured out what works for you, and you found out that you hated owning properties. Because I'm assuming if the phone rang, your blood pressure instantly went through the roof. And if a borrower when a tenant would call you, but if a borrower would call you with a problem, your blood pressure probably stayed equal.
Yeah, exactly. And I didn't have to talk to a tenant once. I never talked to a tenant, and it still had a high blood pressure just because they went through our I was writing checks, I was signing checks, and some of our staff were handling it.
And I think this is where people should say for 2022 or goal planning in general, forget the years, just goal planning in general. You need to identify what's right for you. I just had a conversation with a gentleman the other day, close friend of mine. He said, and he's invested with us and everything else. And he's like, dude, I'm done doing what I'm doing. I just want to buy properties. And I said to him, hey man, what's going to satisfy you, satisfy your lifestyle, satisfy you might want to leave your W-2 job, but are you taking those problems and just bundling them up into a different group of problems, or are you actually solving a problem by trying to invest in real estate? And I think you need to take the time and figure out what's right for you. And you might not know. So you should dabble in different asset classes and try different things out before you just go all in on one asset class to find out you absolutely freaking hate it, right? But once you find a knack for what you like, you should exploit it and go after it and crush it until you're the number one person inside of that, and then go and figure out what else you can do that's a branch from what you're already doing.
Yeah, I mean, we bought dozens and dozens of rentals and flips because that was the business model that we thought we wanted to be associated with. And I think for a lot of newer real estate investors in general, and I don't want to just target newer real estate investors, a lot of our audience have done a lot of deals and they're very, very successful. But again, they'd probably tell you as well that, starting out, you got to kind of have the end goal in mind of what you're trying to accomplish and what resources do you have? Do you have a lot of cash that you just want to put to work and you don't want to do the heavy lifting? Or is it the opposite? Do you want to do all the sweat equity because you don't have a lot of cash that you want to put into? And I think most people start where they don't have a lot of liquidity, or they don't have just tons and tons of disposable money. So they go and they do a lot of the heavy lifting and a lot of the sweat equity. But then as they grow into bigger and bigger projects, they make more and more money. They realize, well, you know what? I want to be more hands off. I want my money to work for me instead of my hard work working for me, because your money's always going to work harder than you can work. It's just that simple. Yeah. And the bigger it goes. All right. So let's go through just another project in 2021 that was a big project of yours.
I would say probably the other biggest project was the recent purchase of our 3-property self-storage portfolio in Baton Rouge, Louisiana. It was our largest acquisition to date. It was $11.1 million, 250,000 square feet spread across 3 different properties. And every challenge that could have been thrown at me got thrown at me. And Dan It was insane. It was the largest capital raise that we did for one project. We had some other stuff going on that had to check the box before we could buy this one, man. It was an absolute grind. It tested us, not to mention simultaneously leaving our W-2 jobs, trying to raise $4.5 million, getting the loans, getting everything in order, doing title. It tested us, and we got it done. That was our biggest one and our most challenging one and our most satisfying one for 2021, I'd have to say.
Yeah, but you were right. You were ready for it. You're in a position that you're able to handle that. It wasn't like, cool, I don't know what I'm doing. I don't have any resources. I'm going to go do this crazy project. You transitioned to that. You owned hundreds of rentals. Then you bought a 34 unit. Then you bought a 76 unit. Then you bought some smaller storage facilities, and then you worked your way up. That's the transition. Like that's how it always works. Starting out in our lending company, we used to do 2 deals a month, and I was in the weeds, and I was like, I can't handle any more than this. And, you work your way up to dozens and to 20 and to 30 and like, that's how it is. So I think time is on all of our sides with some of this stuff. I know everyone wants, a red easy button and, make as much money as you can in a very short period of time. It takes time. It takes education. It takes, executing on a regular basis. But listen, before you know it, think about it like this. In 2021, in January 2021, you didn't have any of that. In December 2021, you have all of that. It's only 1 year, right?
Yep.
Seems like it's a long period. It seems like a long period of time. We've done these podcasts on goal setting and things like that, and you come up with these like crazy goals, and then you're like, I can't hit that. That's impossible. Guess what? One step at a time, right? 12 months earlier, you didn't have any of those things.
Yep.
And again, you continue to snowball and build on what you already have, the resources you have, the knowledge you have, and you continue to execute on that over and over and over and over. It just becomes such a big, powerful thing.
I fully agree. And, that's the one thing, Warren Buffett, Sam Zell, all these big guys, they're how many years ahead of us, and they've stood the test of time, right? And, you got to take the time and say, okay, well, if I did this in, when you say I did this in 8 years, it seems like a really long time. But I swear I remember going to the first property in Pigtown and buying that with Dan and flipping that house like it was yesterday. Like it goes by so quick. And when you look back and say, man, that was already 6 years ago, 7 years ago, like it flies, so looking in the future seems timeless. Looking in the past goes by the blink of your eye.
You have any key takeaways from 2021?
Key takeaways from 2021. You're asking me on the spot here, and I'm literally trying to process that question because there's a ton of key takeaways, man. Like one of the key takeaways I would say is that like knowing that you're doing the right thing will pay off in the long term, even though it doesn't seem like it. Saying no to the right deals, saying yes to the right partnerships, taking money from the right capital investors, disposing of properties correctly, whatever it may be, like, trying to do the right thing over and over again might seem like the long way, but it's the right way. And when you look back in your past, you go, you know what? It was well worth it.
Yeah, I agree. I mean, that's similar to my, the way I look, I'm thinking as well.
What's
related to that?
What's your key takeaway for 2021?
I don't know. Similar to what you said. That resonated. It's kind of. I don't know if this is geared towards 2021 or if it's geared towards our stuff from previous years as well. But like, I've talked about this all the time about staying the course and knowing who you are. And it's a long game and slow and steady wins the race. We talked about this on a previous podcast with Mikey Taylor about like, I've never hit a home run, mostly because I don't swing for home runs. Right. I'd like to hit a home run, but I don't play in that home run space. I play in the singles. I hit singles, daily, weekly, regularly, and singles add up. Right? Like you can hit a home run and you start here and you hit a home run, you're all the way up here. right? And you can leaps and bounds get ahead. But again, if you don't have consistent cash flow, consistency inside your business, you'll drop down. Our singles and our slow and steady wins the race is kind of putting us on the map. Get a little bit bigger every year. 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 Like that's been our game plan, right? And we've diversified into other asset class. We've diversified in other types of investments. But if you're playing in that space, you don't really need to just get big, leaps. And keep in mind, this is when you have also kind of a little bit more matured business compared to a newer business. You need leaps and bounds when you're in a new business, right? Because what a single to me is today could be a home run to somebody who's just starting out, right? If someone's, trying to get into real estate and they flip, one property a month, that could be a home run to them. While somebody who needs to do 100 deals a year, that's just a single to them, right? If that makes sense. So I think that's kind of a lesson that, I learned kind of getting my hands dirty on some of these things. And, sometimes I tried to chase larger projects, and it's like, just stick to the ones that you're good at, and over and over and over and over and over and over and over. And, in 10 years from now, and I've always thought about it like this. So let's say we're in the same place today. We have the exact same access to everything today. And, fast forward to 2031, right? And actually, we're good opponents for this game I'm about to say, because you do less amount of stuff, but higher ticket stuff, right? Like I do smaller stuff, but smaller ticket stuff. It's curious to see what someone's net worth is in 10 years from now. My formula kind of versus your formula, right? Like steady cash flow, hitting singles over and over and over and over and over and over. And then there's you potentially, and this isn't a bad thing, this is just different. You come up and like year one, you're all the way up here already, and you're like leaps and bounds ahead. But then potentially, you dip down, not dip down because you did anything wrong. You just dip down because I have constant cash flow right here, from some of my ventures. You have one venture and then you don't have another venture. And then you have another venture. So I'm like this, and then you're kind of going like this.
Yeah.
So,
well, there's also a big difference between real liquidity and, equity in a property, right? And I think a lot of people get lost in that. That's a whole nother conversation that we could spend probably 4 or 5 hours on, without a doubt in my mind, of, people, having this debate. What I was going to say is, I don't know if you can put it in the comments, but if anybody wants to share what their major wins for 2021 is, happy to share it with everybody up here while we're chatting about this, and happy to have you on potentially. That being said, dude, I was going through our podcast feed, and I forgot that we did the REI Madness at the beginning of this year, and that was a pretty crazy event we did that week.
Yep. I mean, what do we have? 16 speakers?
Yeah, we have 4 groups of 4. 4 groups of 4. And I think what we did was we did team lenders, team storage, team flippers, team new construction, and somebody else. Realtors, wholesalers, flippers, new construction, rental properties, and lenders. I thought it was a really good thing that we did, because it's interesting to see, especially at that time, where everybody was in this BS pandemic, that'll only politics I'll get into in the show. But either way, like where everybody was during all this time, of how they were handling it with inside their business, what their projections are for 2021. I'm actually curious. I might go back and listen to all those episodes just to see what everybody's predictions were for 2021. And see where everybody's gone or what's happened to the marketplace in that time frame. I think the realtors get realtor guys, because they're always very optimistic, probably won that one. And I'd be curious to see what everybody else said.
Yeah, I mean, with the market the way it's at, I'm sure they've really, really expanded their businesses on that.
Who was your favorite guest over the year? We had all them. We had AJ Osborne, Michelle Welsh.
I'm going through our feed to see, a guest that I or a key takeaway from maybe a guest. There's always good key takeaways from every guest, right? Because every single person you interview is really ambitious and gung-ho about their business model. And when we do interviews with them to start with, like, I think my business model is the best. Ian, you think your business model is the best. They think their business model is the best. And a lot of the times, like, we're going into these things blind, not really sure how their business model is structured. And I hear them talking, with passion. I hear them talking with emphasis on how they're doing it. And I'm like, dude, that makes a lot of sense. Like, that's a great business model. So, and it's great for them. And not everybody are entrepreneurs. Not everybody owns real estate. Some are vendors. I'm looking at Justin when, for 1031 exchanges, he works, maybe he's one of the owners of the company. I'm not sure, but, he was passionate about, structuring 1031s and deferred exchanges for real estate investors. That was something that, he did. We talked with self-storage, guys that killed it in self-storage. We talked with insurance agents. Stratton went through a lot of massive automation and marketing, which I like. Both Ian and I are pretty gung-ho on doing, stepping up our marketing game in 2022. I think both of us do a decent amount of marketing, but you can always do more. You can always do more, and things have changed. A lot of things right now are Instagram Reels and Facebook Reels. It's more shorts instead of kind of longer form copy. So,
yeah, no, definitely. Stratton was good. AJ was good. Michelle. I was looking Farling, Abby. I mean, our most recent guest, Mikey Taylor, was awesome. Kyle Robertson. They're all good shows to go back and listen to. Sometimes it's just good to hear how people are really passionate about their business. I agree with that. Michelle Walters, thanks for visiting us from Ohio. There's a few guys from the Storage Rebellion that are out in Ohio, but she made it to 10 single-family doors, stumbled onto the Storage Rebellion, and completely changed her way of thinking about investing. And that's true. And that's what's interesting is that, like, you might be on this path. Yeah, I remember we were just walking around with a broker talking about maybe selling some of our single-family stuff. And we were on the street where I bought my first rental property. And I said, hey, Justin, this is Justin Berner, who we've had on the show. I said, hey, Justin, that's where I bought my first rental property. And we were going through that. I said, I remember when I literally wanted to try to buy this whole neighborhood. And I thought that was the coolest thing in the world. And it's funny how you start. There's two things about it, right? Like, one, you can look at it and say, man, the grass is greener on the other side. Let me trash my business. I want to go try that. Or you continue to grow your single family portfolio because you know what you're doing there. You know how to make money with that. And you start to learn about other asset classes. And then it becomes a tool in the tool chest. So if you stumble across a commercial property, storage facility, an apartment building, you know how to go in and operate that property, underwrite it, whatever it may be, that you can take advantage of that. Meanwhile, you've always consistently grown your real estate portfolio and refining your craft over and over and over again. And that's what we did for a really long period of time. So I would encourage you to continue on your path while also exploring new opportunities and see how it fits into your war chest. So
I remember scrolling through this, my favorite show of 2021, and it may have been at the end of 2020, but I'm not 100% sure. It was about morning routines. We got about 20 to 30 different people on, and they each had a minute. That was in 2020, but I'm going to count it as 2020.
It was right at the end. Yep.
It was right at the end, but I love that one, right? I like getting small clippets of how I think all of us as business owners and entrepreneurs, real estate investors, some of the best books that we all read and the content that we read, podcasts and things like that, is storytelling of what others have done to succeed. Now, when you're starting out or you're trying to get into a new trade, you're going to learn about the mechanics and you're going to educate yourself on the concepts of investing. And that's obviously important, but there's only so many books and content that you can read about flipping a house, wholesaling a house, buying a self-storage facility, lending money, right? you need more kind of knowledge and experience knowledge of what people are doing today that's working today. So I think stuff like that, people's mornings routines were great. We've done one like that. We did what people's key takeaways were from 2021, what their 2022 goals are. Videos like that and content like that's great. So I really enjoyed the morning routines. And for the most part, the morning routines are very, very similar for most people. It's waking up early, eating healthy, exercising, spending time with family, spending time on themselves, through, some sort of personal development hobby, working inside their business, so grinding inside their business, but also spending time on personal finance because that's where it's all about.
Yeah, 100%. Yeah, man, that was a great show. You guys want to continue different aspects of real estate? Sorry, I was reading another question that may have come in, but yeah, man, no, it was that was a great show, and if that's something that you can implement into your routine or take a look at it, there's a lot of good books, there's a lot of good stuff on that exact content out there. Do you guys plan on continuing the different aspects of real estate with similar investments again this upcoming year? Us personally, Jason's probably a little more direct because he has his business model refined. But for us, we're always opportunistic. Storage could go cold tomorrow. Commercial real estate could go cold tomorrow, and single family is the hot asset class. And if that's where the opportunity lies, we have the ability to do it. We remain opportunistic in the marketplace and do the best deal that's presented to us at the time that it's shown to us. And, that's what I was going back to saying, listen, man, you might be doing single family and you see the shiny object over here. Don't trash your business that you already have going. Make your business better and better and better while trying to obtain that other asset class and add it, and then figure out, start split testing and figuring out what you like or don't like. Just because single family real estate is really hot right now, but it doesn't pique your interest, well, maybe you don't want to do it just because everybody else is doing it. So,
yeah, I'm very opportunistic kind of as well. I stick to my core business model. So the way that Warren Buffett, I've learned from is you have cash flow and windfalls. Those are like the two most important things. You got to have your cash flow in place. You got to have your constant income that's always coming in. And when you have that, you have the ability and you have the confidence to invest in windfalls and to try to reach for the fences and try to get into bigger deals. So our lending company has always been kind of a cash flow machine. We're constantly doing deals. We're hitting singles every day. Well, we're also a co-owner of a pretty large apartment building and 4 self-storage facilities. And I think, all the self-storage facilities were this year alone, 2021. The apartment stuff was in the past. And we're going to continue to do that. Like if you look at my goal sheets that I have, I'm always, part of it is investing in venture deals. It could be a straight startup, or it could be some sort of real estate transaction. But as we've grown every year, we've done more and more and more and more. I don't want to operate them. I don't want to run them. I want to participate, typically with capital, some sort of syndication. I've done projects before where I've come in as a partner, or more like an advisor. I say that would probably be the better setup. So we're always looking for new opportunities as well, but we have, 90%, 95% are still our core cash flow business. So think about what I just said related to cash flow and windfalls. It goes so far, it's powerful. And it hit me really hard when I read that Warren Buffett book, The Snowball, because you can't start investing or trying to hit home runs or try to get big windfalls unless you have your cash flow machine in order.
Oh, I thought it was the windfall from that apartment building that refinanced.
What windfall?
You were saying windfalls and cash flow, so I thought it was that windfall from that.
That was a windfall. That was a windfall.
Yeah, massive windfall.
No, it was a great windfall.
But
but again, I can't do that without having a cash flow machine. I'm not going to just put all my eggs in that basket and say, oh, all my investable cash is this. I'm going to put it into this deal and wait, and wait down the line to see if it pays off.
I agree 100%. Well, with that being said, man, 2021 was badass, I think, for all of us. I really enjoyed it, and the last thing I'll leave everybody with, our biggest one was me and Dan were able to retire, quit, whatever you guys want to call it, from the fire department. It's been absolutely awesome. We've done exponentially more in just the short period that we've been removed from there. And look forward to what 2022 holds. Look forward to any new shows that we're doing here on the podcast. I really do enjoy this, whether anybody listens to us or not. I like getting on here, talking with Jason. It allows us to really do our thoughts out in real time between each other, interviewing new guests, hearing other people's business models. So, if you think you have something they could give back to the show, reach out to me, Ian at Equity Warehouse, or Jason at hardmoneybankers.com, or check out realestatereservepodcast.com, and you'll see a section to sign up as a guest. Happy to have you on. We're looking for real people who are doing real things, not gurus, not people that are selling stuff. Whether you're a vendor locally, real estate investor, or maybe you're trying to work out your first deal, we're happy to have you on the show and work in real time with you right here on the show. So.
Yeah, and I challenge everybody to think about where you were a year ago, think about where you were 5 years ago, think about where you were 10 years ago. Think about that, right? Really close your eyes and think about it. And then on the other side of it, a year ago, think about where you can be in a year from now, 5 years from now, 10 years from now. So much further ahead. That's how it goes. Hope you enjoyed this episode, and we'll chat with everybody next week.